Ladies and gentlemen, welcome back to the channel. We have quite the video to get into here today. We just got reports from Microsoft as well as Google. Their earnings are out. One big winner, one big loser. Snapchat doing what Snapchat normally does, go up a lot and then crater. This sets us up for an interesting tomorrow. We do have a couple earnings as well coming out tomorrow that will move our markets. Now, all in all, what's the deal with AMC stock? AMC was up about 2% today, up another almost 1% here in after hours. So we have a lot to get into in regards to our markets. Nasdaq's currently down about 0.25% here in after hours due to this mixed bag of earnings. And again, tomorrow might not be the greatest day for Wall Street. We'll see. I do have one trade idea as well that I'm going to throw out there for you guys. It has nothing to do with AMC, but it's more or less an earnings trade that I am personally looking at. If you guys want to come trade with us live in real time, get access to all of the trades that I make every time I make them, link down below in the description of this video. But we do need to go ahead and get into this. First things first, let's take a look at some of these earnings that came out here in after hours. So Alphabet shares drop as cloud miss overshadows better than expected overall results. Check this out. Alphabet reported revenue growth of 11%, returning to double digits for the first time in more than a year. Sales and profit both topped analyst estimates. The stock dropped in extended trading as cloud revenue disappointed. Google's down almost 7% here in after hours because of the cloud. And it was a small miss. I mean, it was not like a big miss. Google cloud revenue came in at $8.41 billion. The estimate was $8.64 billion. So it was like a $230 million miss, but small compared to the totals here, right? Revenue came in at $76.69 billion versus $75.97 billion. This company's a giant, okay? They own the platform you're watching this video on. EPS came in at $1.55 per share versus $1.45 per share as what we had previously expected. Traffic acquisition costs $12.64 billion versus $12.63 billion, according to the street. So numbers that actually beat basically across the board besides cloud. Even YouTube beat at $7.95 billion versus $7.81 billion that was expected. YouTube is usually the weak spot of Google's earnings. The cloud missed a little bit, and Google's down 6.5% in after hours. Now, what's the deal with Microsoft? So it says Microsoft profit tops 27% as Azure growth accelerates. Microsoft's net income jumped 27% as management cut back on spending. And Microsoft's currently up 3.77% here in after hours. EPS came in at $2.99 a share versus $2.65 a share. Revenue of $56.52 billion versus $54.50 billion as what was expected. So this is where things get weird, okay? So everything grew for Microsoft. Everything grew. Some was light. Obviously, some of these were coming off some pretty easy comps because you're looking at a year-over-year basis. Like Windows OEM, that was up 4% because, I mean, you were down 40% in Q2 2023. So the comps on some of these are just easy. Azure is the highlight here of really Microsoft's earnings. And their earnings were good, but they weren't great. And that's why Microsoft is up 4% in after hours. Microsoft is basically at a new all-time high after this, or close to its all-time high, which is absolutely insane. I mean, you're pretty close now. What? You're at 344. So you're pretty much up there. There's a lot of good baked into Microsoft already. And there was a lot of good news baked into Google already. And that's why Google is down. Now, if you look at the NASDAQ here, in after hours, you're down about 0.25%. You're not safe here. Okay. I think if Microsoft were to have bad earnings, then you could have had a big problem for our markets. The fact that Microsoft had good earnings, and Google had good earnings too, but the fact that Microsoft did not fall here in after hours, it kind of balances out that drop that you're seeing from Google. But net, you're still seeing a loss here. That's because the sympathy move, like a Meta down 1%, other advertiser names, which is a large portion of our markets, let's be honest, are down as well following Google's results. Snapchat is literally doing nothing. Snapchat is up 1% here in after hours, literally doing absolutely nothing after going up 23% in after hours. And then they said this Israel conflict has caused everyone to stop advertising. You really can't make it up with Snapchat. Snapchat is like the worst stock I ever bought. Their IR team needs to just be fired because holy moly, Snapchat never fails to excite. They literally can't pull a good IR release out of the hat if they wanted to. Okay, if they tried, it's like they like to watch the stock get destroyed on earnings. Even if they beat, their numbers were great, but people are apparently slowing down advertising or stopped entirely advertising because of the Israel conflict. It's literally a joke at this point, but nonetheless, Snapchat is also advertiser based, so that is having some effect on our market. Snapchat used to have a much larger effect on our markets, but it doesn't as much anymore. But again, Meta's down about 1%, Nasdaq's down about 0.25% here in this video. Question is, how does Microsoft hold up during the earnings call? This is just one story. I think the markets are pricing in a lot of AI with Microsoft, considering it's trading near its all-time highs. We want to see, how does that earnings call treat Microsoft? If things were to, fall from here, which is possible they do, tomorrow could be an even worse off day. Now, you do have some earnings as well tomorrow that will be important, and then on Thursday. For tomorrow, so pre-market, you're going to have Boeing, Thermo Fisher, T-Mobile, Hilton, ADP, General Dynamics, Lithia Driveway, a couple companies that are, well-known names, but nothing that's too exciting. Wednesday after hours, tomorrow and after hours, you're going to get Meta, IBM, ServiceNow, Align, KLA, O'Reilly Auto Parts, Baker Hughes, Anai, and Edwards, as well as QuantumScape. Now, the trade that I am looking at here out of all of these is ServiceNow. If you look at the put to call ratio, it's terrible on ServiceNow. It's at 1.41, and just for reference here, right? And this is tracking options that expire in the next 1,000 days, and then in the next 365 days. I mean, you have a put to call ratio of 1.38 over the past week, 1.19. So just not the greatest numbers that you're seeing here, right? Pretty pitiful. If you look at something like AMC is much more bullish, multitudes more bullish than ServiceNow. At put to call ratio of 0.67, 0.64, 0.66. AMC being more bullish than ServiceNow in the options world. That's definitely telling. Even Meta, ServiceNow is the most bearish out of any of the earnings that do report tomorrow as far as the option activity. I feel like option activity tends to be one of the best indicators you can look at to see where the sentiment is of big money, especially this aggregated data from Ortex. Meta has a put to call ratio of 0.70. Meta's down again 1% in after hours. We got results from Snap and Google today, so it's not going to be a huge shocker. We kind of already know what to expect from Meta. Question is, did they spend too much money? Did that hit their margins? Did that hit their profitability? Probably not. Meta is a cash cow. They make so much money. It's honestly ridiculous. It probably should be a crime in and of itself. Obviously just playing, but tomorrow you're also going to have O'Reilly's. I think that one is pretty interesting for tomorrow. And if we could pull up the ticker here, O'Reilly Auto Parts does look like they have a little bit more of that negative option, activity recently. Put to call ratio a little bit elevated here, 1.11, but ServiceNow really stands out as a bearish one heading into tomorrow's print. So just a trade idea. I don't know if you guys know anything about ServiceNow or how you could kind of predict their numbers. I'm just going to leave that one with you guys. If you guys would like to come trade with us live in real time, link down below in the description of this video. I'm going to be doing a little bit more research on some of the earnings coming out tomorrow as well as Thursday to see like, hey, what could be the best trade out there, for some big upside or for some big downside. Now, let's get into some of these charts here for a moment. So this one's interesting. It's from the Prime book, the Cumulative U.S. Short Flow. This is from Goldman Sachs, and their Prime book. You can see that shorts covering, which is anything under this line, you're really not getting any of that ever since about March. It's all short selling at this point, which sets you up for what could be another short squeeze in our markets. Yeah, basically what we've seen throughout 2023, it's been to some degree, you thought a short squeeze, right? Yeah, not so much as it looks. Shorts are taking on big positions here just simply as the markets go higher. There was a little bit of shorts covering in August, which is a little surprising, but no, it looks like shorts are just taking on massive short positions here. So could be some good news for the bulls. If you take a look at this chart, it's the pre-election year seasonal pattern since 1949 and the NASDAQ since 1971. And you can see pretty clearly the worst 4 months are July through October. Today is October 24th. Now, November is usually a mixed bag. Not too much usually happens in November. You tend to go up in the beginning, sell off towards the end of November, and then you see kind of a face ripper rally throughout December and heading into the end of the year, which is usually that Santa Claus rally. People are pretty excited most of the time around the end of the year for new positioning in that next year, and just all of the spending that goes on normally in the economy. I feel like this year is probably going to be a little bit more disappointing as far as the holiday numbers when we do get them. That's just my personal opinion, but that's probably going to be something more or less the markets react to towards late December, like after Christmas, around Christmas time, maybe even into January once we get those numbers. So that's a troublesome period. I believe that is coming, but seasonally, historically, you do tend to get kind of this uptick really from here into the end of the year. So we will have to see what does happen with that. It does look encouraging as of right now. Now, with AMC stock, AMC is going to be reporting their numbers. So what we're expecting is a loss per share of 44 cents. Revenues are projected to reach 1.23 billion, implying a 27% annual growth. That is impressive. And I think those numbers are probably going to have a positive effect on AMC stock. If you look at Q3 2019, AMC reported revenues of 1.32 billion, which is 6.8% higher than what analysts are estimating for Q3. It's a possibility that AMC does beat the 2019 numbers. That pre-pandemic number is important for AMC stock. I think a lot of that will get the algorithms going and maybe even push AMC stock up a lot higher. Now, it says in the current third quarter, the domestic box office has already grossed approximately 2.64 billion. In the current third quarter, the domestic box office has already grossed approximately 2.64 billion, exceeding last year's third quarter earnings by about $700 million. Barbie leads the way with 632.4 million in gross revenue, followed by Oppenheimer with 323.8 million and Sound of Freedom with 184 million. So we'll see how everything's hash out on the earnings call. Right now, the markets don't really care as much about that top line. It's all about the profits. Now, AMC is sometimes profitable lately. Last quarter, they were profitable. I believe that was last quarter. If I'm not mixing up last quarter and 2 quarters ago, they were slightly profitable. If AMC could somehow turn a profit, that could be a big deal for AMC share price. Now, if AMC comes close to turning a profit, that's also going to be a big deal for AMC's share price. Especially, we want to hear what are their plans around dilution. We want to hear new growth initiatives, things of that nature, in which AMC has been delivering for us for a long time. We just, again, had that court proceeding weighed over our head that just could not allow AMC stock to do anything exciting for shareholders. And if we look at the option activity, like I said, the put to call ratio on AMC is still the most bullish put to call ratio I can find on any stock on the markets. I can't find a more bullish stock with options besides AMC. AMC is the most bullish stock for option activity right now. And that might make a good title to this video, but that's the truth. You just can't find anything with a better put to call ratio. So, I mean, I think that's a pretty good sign. AMC stock has good things to offer us to come. Now, if we take a look at this week, you have calls in the money 12,000, calls out the money 78,000, puts in the money 9,000, puts out the money about 35,000. So again, like a 2 to 1 ratio, 2 times as many calls compared to every one put that is held this week, and basically the same thing for a while now. So I think a rally could really come at any time. I do think earnings is probably going to be the thing that would cause that big rally. Again, we've seen good earnings before with AMC. We typically get good earnings with AMC, but the last year or so, multiple quarters in a row, we've had this court proceeding hanging over our heads that is just very, very troublesome. Now, if you guys did not catch the last video, Jamie Dimon did rip apart the Fed here today as well. He says, quote, "I want to point out the central banks 18 months ago were 100% dead wrong," he added. "I would be quite cautious about what might happen next year." Says Dimon criticized the omnipotent feeling that central banks and governments can manage through all of this stuff. "I'm cautious." He said, "Whether the whole curve goes up 100 basis points, I would be prepared for it," he added. "I don't know if it's going to happen, but look at what we're seeing today, more like 70s. A lot of spending, a lot of this can be wasted." Now, despite those words, TLT actually went higher today by a pretty decent amount, up another 1.32% here on the day. Yesterday, you were up 1.2%. So treasury yields have been falling, and that is definitely helping out our markets. The NASDAQ was up about 1% today. AMC stock, again, is up in total about 3% today. So that is a pretty good day for AMC. Nothing stellar or spectacular, but you did find more resistance again at that 8-day moving average. This is now, 7 trading days in a row you found resistance at this 8-day moving average. I believe here in after hours, this does break you out above it. This 8-day moving average at $9.35. AMC stock is currently at $9.45, so a whole whopping 10 cents higher. This could set us up for an even larger move coming tomorrow based on just a sole technical basis. So obviously we'll have to wait and see what happens. The RSI starting to curl up a little bit at 43.37. That is looking better than obviously curling down. So to some degree, that is a little bit of good news. The MACD is also making its way higher. It's still kind of in the same spot, though. It's a real tricky situation. Let's be honest here with the MACD. It's trying to go higher, but it's still just trending sideways, going up and down, being pretty volatile. And Microsoft here in the after hours, I'm not sure what they said on the conference call. The conference call might have actually just started. Microsoft is now up 6%, causing the NASDAQ to go positive again. It is very volatile here in the after hours trading. This is going to be what really drives stocks for the better part of tomorrow, and it's just really up and down right now. So there's no clear direction. But in this market environment, if stocks go up after earnings, it seems like people are just taking that as an opportunity to sell. So it wouldn't surprise me if this move higher we're seeing in the markets, the move higher you're seeing in Microsoft, just gets sold off. And that's kind of what you're seeing right now. So it's pretty dang volatile. You definitely want to watch this $2.5 trillion beast. If that does catch some selling due to this earnings call, that's not going to put our markets in the best position possible. So we'll obviously have to wait and see. Again, in regards to AMC is going to follow the markets, is what it looks like we're doing recently. If the markets are really good on any given day, AMC stock is way outperforming. If the markets are bad on any given day, AMC stock is performing in line with the markets. It's not underperforming the markets to big, margins right now, but it's not outperforming if the markets are in the red. It's kind of just tracking what the broader markets are doing. Now, if you take a look at the option activity here today, it says you've seen 2 orders totaling $27,000 with a positive order value of 53%. And there you have Microsoft really starting to drill down a little bit here. Not sure exactly what they said. We're going to have to get those comments maybe a little bit throughout this video. And there you have it. Yeah, getting a little rough out there. This is going to be an eventful earnings call, I'll tell you right now, with Microsoft. But nonetheless, don't let me get too far off my train of thought. The option activity was 53% positive today. Over the past week, you have seen 20 orders totaling $748,000 with a positive order value of 65%. So it's been pretty positive recently. Again, that put to call ratio with options that expire in the next 1,000 days. That's almost 3 years. That's as long as the option chain goes out. You have a, put to call ratio of 0.64 for Monday, 0.67 for Sunday. 1 week ago, 0.66. So all things considered, the most bullish open interest put to call ratio that I can find on any stock out there on the markets. Like, that is telling you something. All of a sudden, AMC is one of the most positive stocks with the option activity, right? The option positioning literally on the markets. I think that justifies a move higher for AMC stock, and quite the move higher if I were to imagine. Now, if you take a look here at the Ortex data, you have a short score of 56, $131 million worth of short positions. Currently estimated short interest of free float at 7.22%, free float out and loan at 9.77%, shares out and loan 19.32 million, days to cover at 1, cost to borrow at 1.29, utilization at 45.53. So nothing too exciting over here. Obviously, you guys got to remember, take these numbers with a big grain of salt. They are not true, in my personal opinion. A short interest of 6.37%. You gotta be joking me. Okay, that's gotta be one big joke. 12.6 million shares that are estimated to be sold short. If you take a look at the cost to borrow fees, cost to borrow average 1.56%, cost to borrow max 6.17%, cost to borrow minimum sitting at about 1%. Interactive Brokers short availability has about 4.9 million shares currently available to be lent out with a cost to borrow fee of about 0.5%. These numbers, I think, are just not true. I don't know if that's an Ortex problem or if that's just the reporting that we're getting. Some people out there obviously don't want their short positions to be exposed, right? And there really is this mad dash to try to hide those short positions, especially as this new US SEC rule is going to shine a light on short selling. We are supposed to be getting the details for all short positions on any stock. Who's taking the back end? Who's actually lending out the stocks? Is Goldman Sachs lending out all the stocks for AMC? Is Bank of America doing that? Who else is doing that? What other prime broker has a hand in that? Is it a majority of just, one prime broker, or is it multiples? Is it, who has all of these short positions? We just don't know that, right? For whatever reason, still to this day, if you're a hedge fund or institution, you have to report your calls, your puts, and that's it. and your shares, obviously. But you don't have to report your short position. So we really have no clue who is currently short on AMC. Some firms report if they're long, short ETFs. Usually those are the guys that will report some of their short positions. But we just have no idea. So I think you're really seeing a mad dash to hide a lot of those short positions before this data does come out. Does that mean AMC stock is less short, compared to where it was before throughout other times in history? I would argue probably not. It's probably equally, if not even more shorted, just considering what's happened with AMC's share price as of recently. Now, for tomorrow at 10 o'clock in the morning, you're going to get the Bank of Canada monetary policy report. You're actually now expecting Bank of Canada to hold rates steady. Just, I believe it was yesterday, we were pricing in a rate hike from Canada. So pretty interesting how quickly that flipped. We'll see if they do still give us that rate hike. Obviously, it's probably not going to be a great sign for the markets. We'll have to wait and see. And then tomorrow, we are going to get a speech from Fed Powell as well at 4:35 p.m. I'm not exactly sure what this is for. It's not like a Fed meeting or anything like that. We'll have to see what it says on the calendar. We'll actually go ahead and do this right now. Fed calendar. And it should show us Fed Jerome Powell. That's going to be October 25th, and that is tomorrow. Okay, so it says speech, Chair Jerome H. Powell, introductory remarks at the 2023 Monican lecture in social science and public policy, Washington, D.C. So probably not going to be a big deal. Who knows? Might move the markets, might not. Probably not, if I were to imagine. It's actually going to be after the bell anyways. And then on Thursday, you're going to get bigger earnings like an Amazon, Enphase, Intel, Ford, Chipotle, Dexcom, Skechers, United States Steel, Capital One, and Vail. Thursday pre-market's going to be pretty active as well. Royal Caribbean, UPS, Hershey, Altria, and Southwest that will be reporting earnings. And geez, the NASDAQ is just so vulnerable to Microsoft right now. It's actually insane. Microsoft getting some bigger moves down, and just at the same time, look at the correlation here. Just no respect on the NASDAQ level. What's bad for Microsoft is obviously bad for the NASDAQ, but geez, the correlation there is pretty big. NASDAQ down about 0.5% here in after hours, and that's kind of just this market we're in. If you see a rally after earnings, it's been getting sold. Even some of the stocks that we had trades on, like RTX, stock was up 10% once you started trading. It pretty soon or pretty quickly fell to like 6% positive. 5.5% positive. There's just no respect for a stock that does good on earnings. It's a sell the stock first, ask questions later kind of market. And I'm sure you guys understand that if you are investors in AMC as well. But that's pretty much it. You don't have much for tomorrow. You do have new home sales. That's pretty much it as far as direct data for our economy. On Thursday, you're going to get durable goods orders month over month, as well as GDP growth rate quarter over quarter. That's really your big catalyst for this week, is the GDP growth rate. We're expecting 4.3%. If it comes out at 4.3%, well, bond yields are probably going to rocket higher. If it comes in lower than that, that might be good for bond yields, but that's not going to be good for just how the economy is doing. So interesting setup here. I don't have super high expectations again for AMC or for the broader markets this week. It's hard to be super bullish when you're seeing a market like ours, but still, nevertheless, there is some money to be made out there regardless, until you do see that short squeeze with AMC stock. But if you guys would like to come join us, come make some money with us, potentially, not financial advice, do what you guys want to do, contact a financial advisor. If you're confused on any of this, link down below in the description of this video. If you guys would like to come check it out, come join us. Nonetheless, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. You guys have a great rest of your day, and I will see you in the next one.